Good evening, guys. Sterling here with the daily market preview for January the 31st, 2017. We are looking at a chart here of the pound to begin with. And levels on the pound will start off initially with upper points 2607. Everything was pretty much a long ways off. Oh, by the way, guys, this will be in 1080p. So I've been waiting to do, as you guys know, I had the October video done, it's ready to go. I just haven't sent it out because I knew I was getting these new screens, which I'll show you guys here in a second, in case anybody's looking at a different computer setup. These are probably some of definitely the nicest screens I've used. Awesome setup. I'll show you guys that here in a second. But I've been waiting to put those out because I want to re-record October in 1080p, and then I wanted to do November and December in 1080p as well. And then also I'm going to be redoing the course this year. I'm going to probably start on that now. That's going to be the first priority I have. I decided to kind of make that the priority here. And I wanted to do that in 1080p as well, and my previous screens just didn't allow for that. So upper points, 2607, that was here. And you can see that we never got back into 2607, therefore no possible trade there. And then to the downside, we had 2525. 2525 was right here. Same situation there. We came into it opening close below with two consecutive candles. So again, once you get two consecutive candles opening and closing beyond the level that throws it out, unfortunately we worked back through it as well. And so that took out the possibility for a backside short. Don't really think it would have mattered there in that case, though, because you'd have got the confirmation there. Entry would have been right at the close of the confirmation. You'd have went up over 25 pips, which would have got you to break even. It would have came back, tagged you at break even. So a couple reasons why, fortunately, it didn't necessarily matter in that situation. As far as new levels go, this one here, the push up that we had was 46 pips. So if we take the calculator and we go 46 divided by 162.8, which is today's ADR. Yesterday would be a little bit different. That equals 28%. So it's a little shy on the number, and therefore no position could have been taken from that new low on the pound. And then as we look back a little bit further, you can see there's really nothing else in the immediate area. That's a really sizable point down here at 24.21 was the last point that we had yesterday as far as an official level goes. And that would have been the last point. So no trade there. The Euro's the one that did produce a setup. Well, dollar Swiss did again as well, depending on if you were using the backside point, a little bit larger point. The dollar or the euro dollar here, we talked about levels a little bit yesterday, and one of the things I mentioned when I was talking about levels, I talked a little bit about, and you can go back and watch the preview to go through if you don't know what I'm talking about, but I talked about the longer we go on levels back through here, I would only look at using major points. And one of the things I mentioned was that we don't know that as of yet because we'll have to see the market get into that area, see where we are, and mainly in one of the aspects, I should say, in relation to the ADR, what levels have broken, and exactly where we're at, because obviously all that really shifts things. Once we get beyond the ADR, we get more aggressive with level selection, and we start to use whatever's in the area. Now 2627 is a point that we used in the past. You guys go back through the preview, you'll see that point. But one of the nice things about it today, at least, was that it was so far beyond the ADR. Makes it a pretty appealing point, given that you are so far beyond the ADR. That level, if we just measure this move, was, well, the level itself was 113. So it was roughly about, 20% beyond the ADR or so. Today's ADR is going to be a little higher than what it actually was yesterday. But if we take this, let me get that one more time. And we had gone as far as max level, or well, it's just measured to the level. Actually, 114 is the even number, round two. And we go, let's see, what would have been yesterday? Let me check. Okay, so it's 89 pips. So we'll take 89 divided by that 114. That equals, 114. I don't know what I was thinking. Divided by 89 equals 1.28. So it was 30% beyond, 28%, rounded up to 30% beyond the ADR. So as far as a percentage of the ADR goes, it was a pretty significant distance beyond the ADR. Going through actual levels that we had listed to start the day, because I list to the ADR plus generally about 10-20%. I don't typically go much further than that because you could start, do you go 150%, 200%? You start to get into, you could have 20 upper points, 20 lower points if you really want to list the possibilities, because the market's capable of doing, 1,000 pips in a day if the right news comes out. So you could list them that far out, but I generally go ADR plus 20 roughly. So upper level, we had one spot, 0772 we never had any contact with. What we did have, though, is we did have a new upper level form, and this upper point, the upper point starts to make sense once the lower point starts to break, so we'll get into that here in just a second. But the upper point, or you start to think of it as a possibility. 0772, actually it was deeper than that. So there's 0772. It goes way back into the highs. Very significant upper point. We'd be happy to take a trade from that point if we came into it. So officially we never came into an upper point. We had 0712 to the downside, and once we came into 0712, the market did exactly what we want to see. If a level's not going to hold, best case scenario, we get a setup and we have a nice profitable trade. Obviously that's always best case scenario. But if the market's not going to hold at a level, then the best case scenario we can see is not producing a setup. Either it doesn't confirm or just blows through the level. That's what we had happen here, 0712. So once that 0712 level breaks, then what you have is you have a new high, because remember, we couldn't have used this high because it would have been too close to the existing lower point, and I opted to use the lower point instead of the upper point, mainly because we had enough of a push down when I was doing the preview. But once that lower point breaks, there's no reason not to have this point in here at 0740, and the deeper point that we had was 0772, so there's 32 pips of separation. Would have looked at adding that point in, especially given that it's the high of the week, pretty significant level, especially once we made this, size of a push down. Would have been happy to take a short off that if we came back into it. Didn't happen, so I'm just going through hypotheticals here so you guys can get a feel for what happens as levels break, because this situation kind of came up yesterday with the pound, and I don't think a lot of people got it, probably because we haven't seen, we've seen a 50% reduction in trades through 2016 as compared to 2015. So you just don't have as many examples of a lot of these situations that we used to see, once or twice a month, kind of the different situations, or maybe even more. And now you're seeing it once every 3 months, So especially if you're just trading the euro dollar and the pound dollar, for those of you that trade, 6, 7, 10 pairs, well, you're seeing more, more of these situations. But strictly in reference to the euro dollar and the pound dollar, I want to talk a little bit about what happens when a level breaks. Well, we might not have chosen 0740 to begin the day, even after you got 30% of the ADR pushed down, because it would have been too close to the lower level. And the first upper and first lower level need to be at least the distance of the max take profit. Max take profit on the pound right now is euro right now is 40 pips. So you need to have a separation of at least 40 pips. And those 2 points would have been about 27 pips apart. So again, you're going to choose one or the other. We opted for the lower level because it had formed at that point. The upper point hadn't formed. But once that lower level breaks, there's no reason not to have that point in as a possible level there. Even though the possibility of a backside of 0712 was still there, the distance from that point now to the upper point is well over the 20, which when the euro's below 100 pips, I'll allow 20 pips is a minimum separation in between your upper points and minimum separation in between your lower points. So there would have been enough separation there, and that's why 0740 would have been a good option there. So I wanted to walk through that because we may not see the scenario, but if I can illustrate it, that's doing one more thing for you guys the next time that situation comes around and you do come back into that high. You get a stop run, maybe it runs off, hits take profit, maybe it stops us out, but either way, I want people in the trade. Each trade is very important, especially nowadays with with the reduction in trades we've had, and everything goes up and down. You have more some trades. Sometimes you have more trades, sometimes you have less trades. Sometimes we'll run higher winning percentages, sometimes we'll run lower winning percentages. But when you have a situation where you're running less trades, and right now we even ran a lower win-loss ratio over 2016, each trade is important, and if you're missing certain trades, Murphy's Law is going to have it. You miss all the profitable trades and you catch all the losing trades. That's how trading goes. That's why mistakes are the big killer. So that's why I want to walk through those situations, maybe do a little bit better job in the previews doing that. Okay, let's see what else. We had 0658 to the downside. That was an official listed point. That was within the ADR at this time, or was near it, I should say. I had to measure it to see exactly where it was. But the point is 0658, really good level. And at that time, once you hit the ADR and the move down, the backside off 0658 would have not been possible. But didn't matter. We didn't have a backside off that. The next lower point that you had was that point around, I think that was 27 or 28. Yeah, that point was 20, it'd be 27. And what you had was a nice stop run from that level, confirmation to the upside on the following candle. So stop run candle here, confirmation to the upside, no major news coming out that we would look to avoid. And you have a entry about 14.5 pips from the low, where the bid 14.5, 15, somewhere in there. So you take the entry right at that point. If the bid price is 15 pips away from the low and you have a 1 pip spread on the euro, that means you technically get filled 16 pips from the low. You place your 20 pip stop from there, your stop would end up 4 pips below the low. If you're taking the entry 16 pips from the high and you apply a 20 pip stop from your entry, 20 minus 16 is obviously 4. That means your stop's 4 pips below the low in that case. If you had a 2 pip spread, your stop would only be 3 pips below the low. If you had a 0.5 pip spread, it would end up 4.5 pips below the low. Pretty straightforward trade there. You can see it's all upside after that, and ran off relatively quickly for a full take profit. Here's 40 pips right around here, 41, 42. So it was a couple hours later. Ran off, hit a full take profit. Nice trade there on the euro. No excuse for me. I personally missed that trade. I was having a bit of a headache this morning, and so I laid back down and missed the trade, bottom line. So I was stupid. I have alerts set up, or I can set up alerts. I have alerts set up through a site called tradingview.com, if you guys are ever curious. I do pay a fair bit for that. I have the premium membership, which I think is maybe $50 a month, something like that, but it allows SMS to your phone, and I didn't set it up. It was stupid. That's basically it. And went back to bed at about 7 o'clock because I woke up a little early. Normally don't wake up that early. Woke up early, took some Tylenol, went back to sleep, never set up an alarm, and that was that. So personally missed that trade, and that was that. So congrats to anybody that did catch that. One of the things I do want to mention, though, is I probably, and this comes down to on level selection, I saw a lot of you guys were in the Swissy short. The only valid short that I saw was off the backside here. Now, it is a big level for sure. You know, it's a good level. There's absolutely nothing else in the area. So once you break that high, the next point becomes a possible option. The only thing I would say, though, is that these 2 points were so close to start the day. If I was doing this during the daily market preview, I would have chosen one or the other, whether it's the deeper point because it's only 15 pips away, or the shallower point there. And to me, the shallower point was a little bit better of a level. It's just my thought personally on that. Now, if with the ADR on the dollar Swiss, you said, well, there's enough separation to leave them both in, or some other reasoning there, being a little more aggressive, I can understand that. But if this was the euro, I would have probably opted for the shallower, more recent level because it was a larger level in my opinion. Yeah, the backside here is not a bad level at all, but this floor or this ceiling here had been tested 3 times, pretty significant upper point, and you would expect a lot of stop activity above that level. That's probably why I would have went to that point. Just my personal thoughts on that. Now, if you understand that and you still opted to choose the deeper level because maybe you're a little more aggressive on level selection and allowing them a little bit closer, well, that's fine. But I just wanted to walk through my thoughts on that because there was quite a bit of activity on that, or at least talk of it, and a few emails on it as well. So I said I would touch on it in the preview, which is also another side point. If you guys ever want me to touch on something in the preview or another pair, I'm happy to do that. Whether it's a trade or just a situation, doesn't matter. I'm happy to touch on that. Okay, I'm rambling on here, so let's try and wrap this up. Levels on the euro dollar. No cycle bias. No cycle bias here because the push down, yes, it was 90% of the ADR, it was over 90% of the ADR, but if we look up the percentage retracement, You can see we're back past that 65% retracement mark. And that right there takes out the possibility of cycle for me. And so I'll keep the open bias to the downside because we came down and we touched, the level is 27, but this is a much more recent low. And because it's basically at the exact same point, I'm just going to round it up to the new low, which is 0628. So 0628 will be the first point that we have to the downside. Actually, I always cover upper points first. Let me finish upper points. Upper points will be the same from yesterday with the exception of the 0740 level being added in. 0740 is the high of the week at this point. So we have 0740 as well as 0772 to the upside. Those 2 points will be our levels today. We had, again, 0628 to the downside. And then beyond that, what I'm going to use, if we go out to the hourly here, we have 2 points that are pretty close to each other. We have this low here that are pretty close to each other. Time really isn't a factor between those two. They're both old points, older in the sense that they weren't formed this week. They were formed multiple days ago, actually the 16th as well as the 19th. So coming up on over a week ago. And so because neither one of them is really much newer than the other, I am going to go to the absolute low here, and that level's 0581. I'm going to list this just in case we do push down. It is ADR plus probably 30 today, 30% maybe. I'll list it just in case because we are seeing a little bit more activity, and I don't want you guys to be confused as it comes into those lower levels. So I will go ahead and list that here today. Looking at the pound, we look at the pound, and the pound's gone sideways for a little bit. It's gone sideways for a day, basically, and a day and a half maybe prior to today. And we did not call this a first push down here. If you go back to the preview, you can go through why exactly that was. The gist was that it was just too short of a push. And so today, this move down that we have was 133. We are getting a push down. It's just not hitting that 90% of the ADR criteria. And so because we're not hitting that criteria, we cannot officially call it a valid push. So today what we'll have in place is we'll still have an open bias on the pound. And so let's go ahead and select our upper levels here today. All right, so upper points, we have a couple retracement points, one New York, one during the European session. I'm going to take the deeper of those two. And that deeper point's at 45. That's 25.45. The next possible level that we have, if we go out to the hourly, this shows maybe a little bit better. We have a couple tests here. We have this high here, this high here. Again, not a great deal of difference in the time factor. And so I'm going to go to the deeper of those two levels. The deeper of those two levels here, if we draw our point, is sitting at 07. And so that level will be 26.07 to the upside. And then finally, the high that we had in place yesterday would be 26.65, and 26.65 will still remain in play. So plenty of separation between this point and the next point, 57, 58 pips. Separation in between our first upper point and our second is over 60. So again, plenty of separation there. And then to the downside, looking at levels yesterday, we had 25.25, which obviously broke, and then we had 24.21. 24.21 will stay in play. 24.21 is right there. And then that brings into question then the only other lower point that we have as an option, which would be this point right here. And the close on this candle was 24.69 and 7/10. So we got to round that down to 24.69. And now we'll run through a little process of elimination. First thing I want to check is distance in between our first upper and first lower point. So we need, with a max stop of 25 pips, that means we have a max take profit of 50 pips on, with a max stop loss of 30 pips, that means we have a max take profit of 60 pips on the pound. So max take profit of 60 means we need to have 60 pips separation at the absolute bare minimum between our first upper and first lower point. Generally, you won't even see me pick it on the minimum because you're not going to get an entry. You're typically not going to get an entry that's going to allow you to take it and hit a full take profit before the opposing level is hit. So in this case, 75 pips of separation, plenty of separation there, well over the minimum. That rule satisfied. The next point is, do we have enough separation in between lower points? So not only do you need the max max take profit separation in between a first upper and first lower, but there's also that separation criteria in between one upper point from another upper point and one lower point from another lower point, and that separation is a little bit smaller. But on the pound with this ADR, I would be looking for at least around right around that 40 pip mark, and generally below 100 pips, 20 pips separation, between about 100, 150, 30 pips separation over 150 up to 200, about 40 pips separation, and going up every 50 pips, another 10 pips of separation. So in this case, you got 47 pips of separation. That is over that minimum 40 pip separation criteria. And with that being said, we can leave in the 24, 46. That's not even dyslexia kicking in. That's just wrong numbers. 2469 to the downside. We can leave in 2469 or add in 2469 in addition to 2421. What was the other thing I wanted to show you guys? Oh, real quick, here's the screen I got. So if you are looking at getting a screen, if you're interested in getting a screen, I bought two of these. They are Dell's. This is the new model. Their older model, 3415, you can get for a little bit cheaper. This was listed at $7.99 on Amazon. You can get a little cheaper, I believe, for the 3415 model. It's the same model. It's just it's just the older design. Pretty much the same thing. But if you're looking to save a couple $100, you can do that. The nice thing about this screen, though, is it allows you to split screens. You can do, it's big, and you can split it into 6 different screens, into 2 different screens. I have it right now split into 2 different screens, and you have 2 huge screens out of that one screen, and 2 of them together will essentially give you 4 pretty decent sized screens. But I went to this from my old setup, which were, I think those are 24-inch monitors. And they're just awesome. I mean, looking at charts on a huge screen, you can't really tell in the video because I have it shrunk down to, 920 by 1080 for 1080p. But what you guys are seeing is me shrinking down the charts to maybe half the size of the actual screen. So when you put it up on the whole screen, it's just huge. And anyways, nice setup if you guys are looking at getting some screens. 2 nice screens, and then that way you can pretty much run it on any computer as long as you have 2 HDMI outputs, or it'll take some other outputs, but you don't have to have something that has 5 monitor outputs because, or 3, 4, 5 monitor outputs, because you are dealing with just 2 screens, and those screens can be individually split within it as a built-in software to do that. So anyways, that's that, and that is the end of the preview. See you guys in the room tomorrow. Sorry for such a long preview here tonight, but I'll see you guys in the room tomorrow for the New York session. Look forward to seeing you there. Until then, happy trading.